This is Gerardo Del Real with the Outsider Club. Joining me today is President and CEO of Midas Gold, Mr. Stephen Quin.
Thanks, Gerardo.
Stephen, thank you for joining us.
Oh, you're welcome.
So we're here at the New Orleans Investment Conference. Cautious optimism, a little more foot traffic.
Yeah, definitely a better tone than it has been for certainly the last 2 or 3 years.
Excellent.
So that's encouraging.
Sure. Now, for people that aren't familiar with the Midas story, can you share with us some of the news here in the past 6 months, which has been fast and furious? Can we backtrack a little bit maybe to the big financing with Mr. John Paulson and talk a bit about that?
Sure. If you go back a couple of years ago, we've been in a holding pattern because we've had limited funding available, so not able to sort of push forward. But in March this year, we did a $55 million Canadian financing, which was fully backstopped by John Paulson and Co. And our existing shareholders had the right to take up to about 20 million of that financing, which they did, so that was oversubscribed. So Paulson and Co. ended up with about $35 million of that financing. And having that $55 million financing completed was definitely the driver that's now allowed us to get on and move the project forward.
Sure. Now, as we know in the junior mining world, one of the things that I preach at the Outsider Club is you want to make sure that the share structure is intact, that you have great long-term shareholders, and that you have a project that's de-risked. And
right.
You've gone through some of the most grilling due diligence processes of any project that I know. I know Teck has been at the project. Franco Nevada has been at the project. The Paulson Group has been at the project. Can you share with us some of the details about how that went?
Sure. I mean, because these fundings were raised during very difficult times, people were very careful with their money, and they had a lot of different options to choose from. So they did a lot of due diligence. The Teck process took probably about 5 months to work. The Franco Nevada process took about 5 months to work through. Brought a whole team of people, did a lot of due diligence, went to site, met different regulators, met community leaders, things like that, to really verify that they were comfortable that we could move the project forward. And similarly with the Paulson process, we met with them for about 2 years, off and on, discussing the project, they eventually came to site, did their due diligence, brought a team of people, met the lieutenant governor of the state, met mayors of the local towns, a variety of that type of things. So they're not just looking at the hard things, the drill holes and things like that. They're looking at your ability to move the project forward. And so that was an extensive process as well. It took us, over 6 months to get that transaction announced. And so, a lot of it was focused on due diligence and making sure that we had the right capital structure that worked for them and worked for us to move the company forward. So, we're very happy with the conclusion. And the key point is it gave us the money that we're able to start moving the project forward again instead of just being in a holding pattern.
Excellent. And you mentioned something very interesting. You mentioned the fact that they did a lot of due diligence with the locals. And I think Midas has taken a very unique approach. Can you talk a little bit about how you've engaged the local community? Because the board recently had an announcement that was made, and you also have Midas Gold local. Right. Can you share the details behind that approach?
Sure. So as you step back a couple of years, we started, or a bit more than that now, almost 3 years, we looked at it and said, we've got the typical mining company approach where, we're Vancouver-based, we've got people who aren't from Idaho on the board, etc. And we started to look at it and saying, well, really what we need to have to gain a social license to operate is local participation.
Right.
And so we started a process which is, been completed now, where initially we brought 2 very prominent Idaho directors onto the board. Keith Ored, who's a leading conservationist, who ran to be Democratic candidate for governor of Idaho. He came on our board, and a lady by the name of Laurel Sayer, who's also a leading conservationist, came on the board as well. And she worked for the Idaho Coalition Land Trust, which is basically groups that buy land to preserve it. And so very preservation type of focus. So it took quite a long time to get them on board, and due diligence was involved in that as well. Of a different nature. How were people going to consider this project and them being involved in it? So we got that done a couple of years ago, and then as we around the same time, we also created an Idaho subsidiary where it basically is the operating entity for the company. So the listed company now provides the cash to the operating company, which does all of the work. And so all the employees and so on are based in the Idaho company. And we created an independent board of that company. I mean, a lot of companies have subsidiaries, but we went a completely different approach. So it has a board of 6 people, and 5 of those 6 are not Midas people.
Right.
We only have one Midas person, one Midas person on that board. And the other 5 were completely independent, and 4 were leading local residents in the county where we operate, and 1 was an operational fellow out of Denver. So we created that structure, and so they've been very involved in ensuring the project from the inside as opposed to the outside is doing what it's supposed to be doing, and what we're doing is correct. And then just recently in September, just ahead of filing the permit application, we made another change where we asked Laurel Sayre if she would come off our board of directors at the parent level and become president and CEO of the operating entity in Idaho.
Excellent.
So this is a very different approach, because now we have a leading conservationist who is leading the permitting of a mining project in Idaho. And obviously she's had 2 years to get familiar with us, our project, what we're planning to do, and she's very passionate that there are projects that can work, and that this is one that should be an example because of the brownfield nature of the site and the ability to clean it all up. So she moved off the Midas Gold Corp, the parent board, to become CEO of the operating entity in Idaho.
Right.
And then we replaced her with a fellow by the name of Michael Bogert. And Michael Bogert ran Region 10 of the EPA for the U.S. government. He was counsel to the Secretary of the Interior federally on regulatory matters relating to permitting and of all types of different projects, not just mining. Was very heavily involved in a major water rights allocation up in northern Idaho. So a variety of different things like that, and a very collaborative person trying reach across the aisle or reach across the communities into different groups, and so very successful in doing that. So we've really strengthened our presence. He's also an Idaho resident, so we have a very strong Idaho presence. In fact, we have a majority of Idaho people that run the company day to day. So it's a very different approach, having conservationists leading the permitting of a mine.
Absolutely. Now, how important, you recently filed the PRO, the Plan of Restoration Operations. How important has the local input been in preempting a lot of the problems that the typical project would face? Because what struck me when I visited the project was how engaged the locals were and how engaged you were with them in preempting a lot of the problems that typically you hear about later on in the process after the application's been filed. Can you share a little bit about how that's worked?
So, we prepared our draft permit application late last year, and we weren't able to file it at that time because we didn't have the cash in place. So rather than just wasting time and doing nothing, we said, well, why don't we take a draft of this permit application out to different community groups, to regulators, to NGOs, and different groups, and have them look at it and critique it, if they were willing to do that. And a variety of groups were willing to do that, and some of them spend a lot of time and effort going through it. And it doesn't mean, and we're not saying that means they're not going to have comments later, but what it should do is short-circuit that process to have what we actually filed. By the time we got that process completed, is something much closer to what they're expecting to see, and questions that they had already answered, points that they thought we missed or we didn't address in enough detail, we've added all of that type of information. And so it should result in a much more complete document that goes through the review process more efficiently and more effectively, and time is money. And so we may have lost some at the beginning, but we probably gained it at the end by going through that process. And it was very extensive. I think we had over 60 meetings this year on it. We had over 50 meetings last year, and some of those meetings were 2 or 3 reviews of successive drafts.
Right.
Well, there's your comments.
Right.
Well, here's the next version. Did we adequately address your comments? And so it should all help the process and moving it forward relatively quickly.
Wonderful. Now, another unique aspect of Midas is that you're going through the permitting process, and here comes the fun part. You already have over 6.5 million ounces across all categories. You have excellent metallurgy. You have phenomenal exploration potential, and you're drilling again. And so,
Correct.
as you know, one of my favorite things in this business is get out there and drill and see what's out there and see if you can add value via the drill bit.
Sure.
I'm excited for results. I know you've been drilling. Where is that now?
Sure. So there's really kind of 2 types of opportunities. When we went from preliminary economic assessment to pre-feasibility study, one big difference between those 2 studies is you cannot use inferred resources in a pre-feasibility study. So between the 2 studies, about 1 million ounces disappeared from the mine plan by the time we got to pre-feasibility study. We talk about this in the pre-feasibility study, that those ounces are not excluded for economic reasons. Like if we use the pre-feasibility study economics, those ounces are still there.
Correct.
So it's really a question of confidence. So the obvious thing is convert them from inferred to indicated, so now you can use them in the mine plan. And so part one of what we're aiming to do with that drilling is to convert the inferred from inferred to indicated, so therefore they can be used in the mine plan for the feasibility study. So that drilling is underway, and we're doing that in a variety of parts of the different deposits, but really focused on yellow pine and to some extent Hanger Flats, because there's where the biggest bang for the buck we saw looking at all the different options out there. Then the second type of opportunity is there are drill hole intercepts which didn't make resource, which are sitting in and around the pits. And so these are ounces that aren't in any category. They're not part of the 6.6 million ounces we have, but they provide an opportunity to add additional ounces. Obviously, you just don't want to add ounces for the sake of adding ounces. What you want to do is add ounces that add value. The way they will add the most value is that if they're so valuable, they come very early in the mine life. So you don't care about something way down at the bottom of the pit, because that's going to be many years in the future. What you care about is something that maybe comes in year 1 or 2 or 3 or something like that. So there's a number of targets like that, and probably the highest profile one is this area called Yellow Pine Northeast, which is a bit of a misnomer because it's not actually part of the Yellow Pine deposit. It's on the other side of a big fault in a different type of rock. And what intrigued us about it is in the 1930s a hole was drilled there where there was just under 6 grams a ton gold over 45 feet, which is very nice grade. That's 3 times the grade we're planning to mine in the reserve pit. So the question obviously was there more? So in 2014 we drilled a few extra holes in that area, and we tapped into an area about 100 meters along strike from that hole, where we drilled about 70 meters or 200 feet, over 200 feet of 5.4 grams a ton gold. Wow. Well, that's still over 2.5 times the grade of our reserve and over a significant thickness. So the big question now is, well, how much of it is there? Is there enough to affect the mine plan? So we've drilled another hole into that area, which has been completed and has been sent for assay. We don't have any results yet, so we just have to wait and see how they come out. And it's a hard area to assess because when we drilled that area in 2014, you really couldn't see the mineralization the way you could in the other deposits where it's much more obvious. So the question on this one is, how does it grade? And if it maintains those very high grades, then it becomes quite intriguing. But that's not the only opportunities like that. There's a similar area at Hanger Flats where we have intercepts of 3 to 4 grams gold and 1 to 2% antimony that's just sitting on the side of the pit. And again, it doesn't make it into the mine plan because it doesn't have the continuity that we need, but you see the very good grade intercepts. So we have some holes planned there probably early next year that we'll aim to drill into that area and try and bring that into the plan. But it's those kinds of things where they're exceptionally better grade than what we're already planning to mine, where the real bang for the buck is in improving the value of the project.
Excellent. So significant opportunities to hopefully increase the net present value. You still know where
Correct.
those million ounces are.
Right.
You haven't lost them.
Nope, they're still there.
You still have the antimony. You haven't lost the antimony.
Right.
Excellent.
And the aim is to get it back into the mine plan and show the feasibility study having significantly more value than we showed in the PFS. And that's the point of PFSs, pre-feasibility studies. They're aimed to say, okay, here's where you are now, and here's what you need to do before you go to feasibility study. So now we're doing what we said we were going to do in the pre-feasibility study, and the aim is to bring that value back to the table, so when we get to feasibility study, it's part of the economics.
So assays maybe next couple of weeks, next month?
Yeah, we'll see how quickly they turn around. The surprise is that the labs are very busy. Right. So there's a lot of people drilling, the resurgence, the industry, and the labs haven't ramped up people as much as they might have done. So, we're seeing maybe a month turnaround, but that's not that far away. So maybe by Thanksgiving.
Wonderful. Well, you have a world-class resource. You have long-term committed shareholders. Cash in the bank stands at approximately how much?
About $40 million at the end of Q2.
And assays are pending.
And assays are pending.
Wonderful. Stephen,
Great.
thank you so
Gerardo.
much. Appreciate your time.
You're welcome.
Thank you.